Good morning and happy Monday, traders. It is 8:02 a.m. Chicago time on the 28th of November, 2022, the last Monday of November of 2022. Make the most of it. Derivatives trading is not suitable for all investors. This is episode number 2365 as we make our way to 2400 episodes. This morning, just popping right into the convergent trading pre-market summary sheet. This morning, we see that the markets are off. Risk-off sentiment, mild risk-off sentiment. The headline news this weekend was the unrest in China. Many in China are just done with the COVID restrictions imposed by the government, the zero tolerance policy, where they're welding people's homes shut. Some people had burned in a fire due to this circumstance. Very draconian measures. And so as a result, the people are rising up. We saw people rise up in the Foxconn factory. The people who make your Apple iPhones and things like that. So there were clashes with security forces and so on, and it's spread into other areas in other regions within China. So this automatically has set back Apple stock. Apple stock had dropped on Friday, and then this morning was down as much as a little over 2%, because Friday Apple closed down 1.96%, and this morning it was down over another 2%. It's expected to miss its delivery estimates on new iPhones by 6 or 7 million. Some say 6, some say 7 million units. And so the stock is responding that way. We're also seeing crude just get absolutely hammered. We'll talk about crude a little bit today. There's some interesting things going on there. And that's what's on deck. As far as the news, not too much going on today. Really nothing heavy came across. There were ECB's Lagarde is supposed to be speaking currently. And then we have Dallas Fed Manufacturing at 10:30, Fed's Williams Bullard at 12, ECB's Nagel 12:10. The unemployment rate out of China and retail Japan and retail sales out of Japan. Again, keep an eye on the energy sector. It's really getting hammered. And this morning, actually, when we look at the energy and minerals sector of the stock market, we have ExxonMobil down 2.75%. Crude is down 2.66%. Chevron down 2%, even though Chevron got some good news this weekend in that the U.S. government will allow it to drill and extract oil in Venezuela. So that's where we are currently. The energy sector is getting hit. Tesla's down 1.84%, and the techs are holding steady, down about 0.5% or so in aggregate. So this is where we stand. Looking at the S&P, the S&P has a balanced profile with a downward skew. The volume so far has been 245,000 contracts in the overnight session, which is relatively decent. The inventory is 100% short. We basically settled on Friday in what was a kind of a sideways balanced profile, and we are below that by 34 points. So we are gapping down on the S&P, and we are just teetering at that 4,000 millennial figure and holding steady there. So be very interesting to see this morning whether the ES makes an attempt higher to fill in the gap from the 25th, or if it's going to move away from the 4,000 and explore prices down towards 39.70, 67 or so. The range in the overnight sessions, 31.75 points, and the point of controls at 4,003, and that's where we stand. Quick Reminder that it's Monday, and as such, the rotation figures have been changed. Generally, our figures have gone down. Volatility is going down. Our impulse numbers have gone down. I think the impulse last week for the ES was 12.75 points, and this morning it's 11.75 points on the upside. So make note of these rotations. They are going down. So that's where we stand. Let's take a look at the market. First and foremost, we're going to look at the delta. Look at this delta this morning. On the open, despite the gap down, we have large lot buyers last night when the markets open, and you can see they're still holding steady. The very large lot buyers have not backed off. They were up around 650 contracts in the delta, and have remained there. We're at 438 currently. It's very interesting that there were buyers at the open immediately, and then they have not backed off as the delta has fallen and price has fallen. This is an interesting point. The large lots flat, and the small lots, what's controlling the cumulative delta. Mainly the action is being controlled by 1 to 9 lots. Remember, with this information, we are reassembling the data. So we're using Rhythmic's MBO data, which is very, very detailed. And we're taking and reassembling the trades to make them so, a 9 lot that's going off in 1 or 2 lots will show up at 1 and 2 lots on a CQG feed or any other feed. But on this feed, it looks at the order and determines that those 1s and 2s that are trading are actually part of a 9 lot, and it'll reassemble it and count it as part of the small lots. So this is very, very accurate data, and the delta is down with price, but only on small lots. So this morning, I don't have too much confidence that the move lower is all that meaningful. We will be opening in a gap, so gap rules apply. We need to see how the market responds to the gap. The gap is relatively significant. It's not great. It's not immense or anything. The gap's about 36 points right now from settle, and we want to see does it become responsive and push towards last week's range, or does it continue lower into, like I said, the 39.70 or so. So that's where we stand this morning. We're holding sideways, and overall the profile is sideways. Looking at the intraday, here's where we are. We've pushed into the 4,000. We've successfully pushed into the 4,000 here last week. You can see that we got to the 40.50. I've talked about the 40.50 quite a bit last week. We went to 40.50.75 in the overnight session and came right off and made another attempt. And the second attempt is relatively weaker right here. So we made a second attempt. It is relatively weaker and have come off since. So this is very likely to move down into the 39.67 is what I'm expecting. Oof, can't write this morning. 39.67, I'm expecting this thing to start to shift down and test the area below. So this is what I'm looking for today. Last week's action brought in a higher high, higher low on the weekly, and settled really near highs. Last week is a holiday week, and it's very hard to tell what to do with some of this data on a holiday week. But so far, we've had pretty strong price discovery to the upside, and all we've done is balance since. See how thin this is down here. So if we cannot, with this double bottom, many will see this as some sort of a cup and handle or saucer formation where the pivot gets broken and we have a strong run to 4,100. But overall, for today in the intraday, we're looking to see, does it become responsive and push higher and into the prior range, or does it continue lower and push down. Friday is a partial day. I normally remove those from my charts. I'm not interested in partial days. So Friday's action, where it traded basically between 40.25 and 40.39, really isn't meaningful. So we're still looking at last Wednesday's action to see how we did. And last Wednesday traded from 4,003 or so to 4,039. Friday's inside of that. And so we're comparing the action to last Wednesday versus last Friday. If you compare the action to last Wednesday, we're opening in a very, very small gap. Remember, the low is 4,003, and we're currently at 4,000. And then last Wednesday's settlement was, or close, was somewhere in the, looks like basically the same, 40, 35-ish, 36-ish, something like that. So again, all we're doing this morning is looking for, does it go up on the open, or does it get offered and keep moving down? Given the relative delta, I would think that it's very likely to be a pretty choppy open this morning, and it may respond to the upside. The inventory is 100% short on small lots. It's likely to be corrected. So I'm looking for a push higher on the open. And then the question is, once it pushes higher, so this is the important part. Once it opens and pushes higher, does it then push all the way back through the open when the sellers step in, when we put in our opening swing high, or does it push higher and then it has a hard time pulling back? That's the clue I'm looking for. I'm looking to see if it's responsive. How does, if it's responsive buying, how does the selling work? If it's responsive buying and it just kind of moves up and then it sells very quickly back to the open, that I'm not going to be looking to the long side. I'm going to wait to see if we get an extension down, weak buying after that. Then, and only then, am I looking to sell into the 39.67, and I'm looking to capitalize on that 23 or so point move from wherever we open. So you can't be responding to the first move. We need to see, does it show weakness on the buy or the sell side on a pullback? And that's the first clue that we're going to get. Okay. So here's what things look like on a TPO chart. You could see that we've gone down, back up, and we formed this kind of handle here. And it's really important to see what it does at the 40-50 on a retest. We're well below that. We're 50 plus points below that. But this thing does not look very weak to me. It may pull back a little bit, but overall the market really wants to get through this low volume node and get to the other side. So we're looking for 4,100 at some point this week, unless something dramatically changes, which means that we end up going below 3,900. Unless we go below 3,900, the longs are very likely to have it. And then we get into the December rally, the seasonality there, and we start to look for 41.20 as the first target, 41.50 is the next target. We're really starting to squeeze those shorts out. And that's how it's shaping up. If this price, the 40.50, was too expensive, the market would have shifted away from that. Sellers would have been very motivated to come in and hammer away on the bid and move it away to make profits. And they're not doing so. This is important to remember. I'm going to spend just a minute looking at crude. Crude has this important fact. Crude made a high back here. I forget what it was. I posted about it this morning. Let me look at what I wrote. A lot of information in here. Crude made a high, a back adjusted high of 117.02. 117.02 is the high of the year in crude. That was way back in March. Then we dropped. Then we made a swing high, the latest swing high over here at 93.15. We are down about 37% currently from the high of the year. We are down approximately 21% from the swing high. What's important is we took out this last swing low, which was at 74.97 or so. 74.97. We took that out. I had, for those of you who are part of convergent trading, if you look at the stock zones, there's a green band across at 74.97. This was key support, and we're taking it out. Here's what's important here. We are making lower highs and lower high swings, lower high swings, lower high swings, and so on. And we're moving lower, right? So this is basically the inversion of what you see in the S&P, an inverted cup and handle kind of formation here, right? I'm not a patterns trader. I'm not a formation trader. But I use those terms to describe what it looks like and why that's significant. The auction is describing the same process, that if this price was too cheap, this market would not have come back and taken it out. And so participants are saying that these prices are not cheap enough. But here's what's important. I can't on this platform, on Edge Pro X, as much as this platform can do. Again, it's not intended for long-term analysis. It's intended for active traders. On this platform, I tried to go back and set the relative delta, the cumulative delta, as far back as I could go, and as far back as I could go is it resets on the monthly. So the relative delta, the cumulative delta here is resetting every month. What do you notice? On the way up, cumulative delta on a day-to-day basis, month on month. Now, if you take the open of the next month and attach it to this month, you'll end up with much higher, right? So if you look at these months in the cumulative delta, they're finishing positive, except for this month, which finished flat, September. Look at October. Look at November. They're finishing positive delta every month. They're essentially finishing at the top of the relative delta every month while price is falling. So if I connect the beginning of the next month to the end of the last month, I will end up with a delta that starts to move up over here, and it is really pushing higher, slows down a little bit, pushes higher, goes flat, and it pushes higher and pushes higher. This is what the delta would look like on a month-to-month basis, or on a cumulative basis, not resetting every month while price is moving down. So as price is moving down, somebody's buying the living bejesus out of these, out of crude. And remember, crude doesn't have a, crude represents its own self as a commodity underlying the future. So you can have a crude future, or you can own crude, the actual liquid, okay? And so there isn't like this arbitrage going on across different, synthetic products like you have with the S&P and so on. This is movement. This is trading in the futures against the underlying, or it's speculation, or, the curve is in contango, which means that the farther expirations in crude are cheaper than the current. That feeds into the fact that somebody's accumulating a lot of crude, and that may be the U.S. government buying for to put crude back into the Strategic Petroleum Reserve, which the SPR, which they have drained to help push prices down for U.S. consumers and so on. But to me, this is somebody's accumulating as it's moving lower, and I'm expecting this thing to stall out as it pushes into the 70. The 70 is the price that was announced by the White House as a key area for them to buy. They seem to have been buying, it looks to me like they've been buying from 78 to the current prices, and crude was stuck between 85 and 90. But as soon as it fell through, all of a sudden the delta actually accelerated, the buying delta actually accelerated to the upside. This is very hard to see on most platforms, but you can see it very clearly here that crude somehow is enjoying this buying spree as crude is falling. Look at how crude is done. Remember, I told you this last Monday. I said, listen, one of the things you need to note about this news with Saudi Arabia. We had that V bottom. We had news that Saudi Arabia was going to push OPEC to produce 500,000 barrels a day more. This is after the Prince of Saudi Arabia was given immunity by the administration against prosecution. And I said, look at that point of control there. That point of control down at 76.30 something did not move up with price by the end of the day. And as a result, we are very likely to get back down to that point of control and retest it. And we did. Almost the next day we held higher. Then the very next day, we started moving through the thin volume, and the expectation is we would hit this naked point of control right here. And we did. We hit it this morning, right? We actually hit it last week, but we pushed through it this morning, and we're establishing new balance down here near lows. And while we're doing this balance near lows, we are actually accumulating. The aggressor is buying crude on the way down. Very, very interesting stuff. I wanted to kind of diverge a little bit on our discussion from the ES there because there's some interesting stuff going on in crude. Again, I'm not advocating that you should trade it. If you do, please do so in the micros, not in the full-sized contract. One thing I want to remind you of this morning, I don't know if it's this one or the other one. Here it is. We have a show this Wednesday at 12 o'clock. We have a giveaway that ends at 11 o'clock Eastern. Be sure to register for this. We're giving away two Edge Clears, giving away two Series 8 Apple Watches for this giveaway. In order to register, go to edgeclear.com/deli. Again, edgeclear.com/deli. We're going to have Tom Canfield on, Brian Shannon, also known as Alpha Trends. We're going to be talking about how to take stock of the end of the year and kind of set yourself up for next year in terms of being ready to take on whatever action takes place next year. Next year is very likely to be an interesting one, a continuation of what we saw this year. So be sure to register, edgeclear.com/deli. We're going to cut this out, get back to business, and we're going to wrap this up. So what are we looking for today? Again, inventory 100% short. Let's expand this just a bit. Inventory 100% short this morning. The expectation this morning, open auction response to the buy side. I'm expecting it to have a hard time here at the 40.10. The 40.10. Test the 40.10. And if I'm expecting it to push lower, I'm expecting it to then accelerate through to the downside. And I'm looking for a retest of 39.67 down here. 67 is the price I'm looking for. That's the primary scenario. This is playing on what has occurred overnight and the fact that we tried to push that 40.50 and just could not a few days ago. And the expectation is we are likely to now facilitate trade down to the downside. Open auction, push the low, maybe move into that naked point of control in the 85 region here. We're looking for an impulse up. If it impulses up back to the open, now we're looking for weak selling on every push higher. And in that case, 40.10 retest and then start to move towards the upper distribution of last week, which brings us back to that 40.32 area. Okay, this is a gap to settle trade. 40.32 would be the target to the upside, and that gives us plenty of range for today. Those are the two main scenarios. So we're going to look immediately on the open. How well does it push up and how well does it pull back? And then start trading from the side that has strength. You don't need to trade the open. I don't recommend you trade the open. It's likely to be a choppy one. Take your time. The longer you wait, in my opinion, the longer you wait, the more likely you are to make better decisions versus trying to read the market on open trade where everybody's just piling on. It's really hard to see. Unless you're trading algorithmically, it's really hard to see which side is winning the race. Good luck. I know it's a lot to digest, but good luck, and I'll catch you tomorrow morning. Don't forget to register for edgeclear.com/daily. Hit the like button. Be sure to subscribe to the channel. If you're not subscribed, I'll catch you tomorrow morning. Take care.